Hello everyone and welcome to another edition of the Forex Technical Market Update for Friday, August 21, 2015. Now, what we have in front of us is a chart of the British pound, and this area at this 157 region for the pound, the market closed above the area on the 4-hour chart, but immediately pulled back again. So this area is proven to be fairly stubborn resistance in the British pound here, and notice we have an ascending triangle, and the market is definitely trying desperately to break above this level, but it's proven to be very strong resistance. So we just have to wait and see if this market is going to definitively break above the level, and that will be a daily close above 157. I would say a daily close above 157.17, 157.15 would signal to me that the market has cleanly broken the resistance area. Okay, but the major news is the euro, and what's happening with the euro. The euro is merely coming up on the top of its channel, not its channel, its triangle. We see that the market traded down to this trend line here. Some slight recovery, market traded down to the trend line again, market now recovering. So what we're doing and what we're setting ourselves up for next week is to look to see how the market reacts with this trend line that is coming up. If the market comes up, finds resistance at this trend line, we could trade back down, and then we'll test this trend line again, and we could break below, or this could maintain and we remain in this triangle. Another possibility is that the market could break out of this trend line and signal a greater retracement here in the euro versus the US dollar, because this big move down, we still have not retraced it to any great degree. Okay, so that is what's to look out for in the euro versus the US dollar. Taking a look at the Japanese yen, and I spoke about the fact that the Japanese yen could rally in case of the stock market breaking below this channel support, and that's exactly what seems to be happening. The market broke below this channel area of support, and the Japanese yen has been rallying ever since. Now the rally is not huge, but it has been rallying nonetheless. But putting this in context, we're still in a consolidation pattern with the Japanese yen, and this market may very well trade down to this trend line, and we'll wait to see if this finds support in the trend line and we head back up, or will the market break down and continue strengthening. So that's what we're looking out for. Taking a look at the Canadian dollar, while the Japanese yen was up strongly, the euro was up strongly. The Canadian dollar is not really moving much on what is happening now. Taking a look at the support and resistance levels, we have support in the 129.50. The swing low is support, and we also have resistance up at 132.13. Keep in mind that this is a new triangle here. You can see it even more clearly on the 4-hour chart. We're in a new triangular consolidation with the Canadian dollar, so we could break to the upside or break to the downside, as with most consolidations. Taking a look at the British pound versus the Japanese yen, the market is pulling back somewhat in retaliation with the rallying yen, but we're currently trading at support in the 192 region, and also there's support at 191.02 in this market. Now, if you are long this market, you are experiencing a slight pullback. Let's say you are long this market, you bought somewhere in here, the market traded up, and you are receiving a slight pullback. And when you are receiving a pullback, or when you're seeing a pullback in your portfolio, it's very tempting to just quickly take profits and exit the market. But this market hasn't shown any evidence that this pullback is much larger, and we may see a return down to this 186 level. So depending on your time frame, I don't know if you're trading a daily time frame, I would not exit this market yet at all. It just hasn't reached the levels where I will exit this market, because when you are trading and you normally see pullbacks, and it's very tempting for you as a trader to take small profits, and then the market quickly turns around and heads to the upside. We saw something like that earlier this year with the Canadian dollar. The market came up, and this is for position traders I'm speaking about. The market came up near the swing high, and in this pullback here, I remember we're speaking with some traders, and the market pulled back here and gave what is commonly interpreted as a sell signal. And let's take a look at this market. The rationale was that the market was at a top, market traded up to the resistance area, and we got what they will teach you as a classic sell signal. Now, this person was long the Canadian dollar near this 122 region, and he was arguing, or his rationale was that he will exit this market because he got this sell signal. And I said that the market hasn't really declined much yet, because when the market hits these resistance levels, it's common sometimes to see some slight pullback. But he was adamant, and then what happened? The market rallied and it's still in rally mode, some 300-400 pips above that level. So sometimes when you're position trading, and we're speaking to position traders here, it is tempting sometimes to take profits too early. And remember, how you make money in the markets is by cutting losses short and letting your profits run. And that is the importance of having a trading system that allows you to make your profits run. Okay, so that is enough of that lecture on the Canadian dollar. Taking a look at the gold market, we see that the market is in retracement mode. I said yesterday that this market could retrace. Now, the swing high was up near this 1300 level, and the market has retraced the 38% retracement of the high from 1300 down to 1080. If you want to look at another swing high from this point, we see that the market has retraced some. Oh, wrong one. Sorry. Let me not put both of them on so you can have some clarity. We traded up to close to 61% retracement from this swing high. The swing high up in 1225 down to 1080. So this market is still in bear market territory. We're seeing lower highs and lower lows in the gold market. Now, it's the end of another week. It has been a fairly choppy week so far, but we're seeing the markets pull back, and we could see some breakouts in the markets. We just have to wait and see what happens next week. Now, if you would like to have the trading signals sent to your trading account automatically, you can click the link below this video. Normally, when we have situations like what's happening in the markets, it's the best time to enter, because we're either at the beginning of we are either at the beginning of new trends, or because of the consolidation, this will be a good time to enter the market. So thank you very much for listening to the market update, and click on the link below to get the signals, and I will see you again next week. Thank you.